You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show, Mark.
Glad to be here. And I have I like to have my fuzzy little friend on my lap, but I think he would bite me. So no groundhog in front of me today, just my bulldog. He looks like a groundhog in a certain way, but, not as fuzzy.
Did it see its shadow?
Yeah, he saw his shadow too. Yeah, 6 more weeks of winter. We talked about this last week. Wall Street doesn't want to talk about it. They want to talk. They want to interview people that are managing money, that are promoting their stocks, or talking about the economy, which really they have no sense of whatsoever. It always comes as a surprise to the analyst. And the ultimate example of that is the Federal Reserve, which has botched Fed policy for decades. But interesting thing about the groundhog, we talked about this last week, and I published it in my newsletter, and I sent pictures of the groundhog everywhere. But geocosmically, the February 2nd date is exactly in between the winter solstice and the vernal equinox. And historically, there's a precedent for it, going back hundreds of years. And I cited all those examples last week, so we don't have to go over it. But it is in my newsletter for those that sign up for it. But it also, for whatever reason, which I identified many years ago, it seems to be coincident more or less with volatility, that is downward action in the markets. Not 100%, but pretty darn close. So you got to watch out, when February rolls around, either side of the Groundhog Day, that the markets could have a sell-off. And certainly we've seen that in gold and silver just the last week or so. And just prior to that, the negative action in Bitcoin and crypto, which unfortunately, or fortunately, has been a leading indicator. We've seen this happen already, where Bitcoin turns up or down. It's usually ahead of the overall market. So if we want to see the markets turn up, we're going to want to see Bitcoin turn up or crypto turn up. So we'll see when that's all going to happen. That should give us a few weeks of leading indication for the stock market. But we're in this treacherous period. I mean, it could end really quickly. We have the Ides of March coming in March, and we also, as I mentioned, you have the vernal equinox on the 3rd week of March, and there have been instances, again, nothing 100%, but there have been some crash market lows right around the Ides of March or the 3rd week of March. So, we're in this period where you really we gotta watch it. And the, recent market weakness has really, been attributed to, many of the big name stocks, the Mag 7 stocks, for example, and they were way, way extended. I mean, it was for weeks and weeks and months, and some just like out of sight. But, Microsoft was down 5% in the last 24 hours after the close today. Amazon is down sharply. Oracle was down 7 to 10%. ServiceNow down about 8%, Salesforce down 5%, Qualcomm down 8.5%. So a lot of the big names, out there, which weigh heavily in the indexes, have been creating, or triggering much of the market sell-off. But that said, the market starts looking for alternative, other places to go, and we've seen other names, take off. Like Johnson & Johnson and Procter & Gamble and, names, of that ilk. One of my favorites, Constellation Brands, which is in the liquor business, which also owns part of Canopy Growth, the cannabis company. So, money starts looking for other places to go. It just doesn't leave the market altogether, though I'm sure much of it goes into treasury bills during these periods. So it's just a fascinating time. It was all something that I sort of warned about, predicted. We, had mentioned getting short the market and being careful. And then fortunately, if you look at the charts, the S&P, I mean, there's considerable downside risk. I mean, it doesn't have to happen here in February, March. It could come later in the year, perhaps a black swan event of some kind, and we can speculate about what the black swan event is. I list a whole bunch of them in my newsletter. about 6 or 7 possibilities out there. We can speculate about those and talk about those at some point. But you had the S&P, was flirting with that 7,000 level, the U.S. S&P 500. But there's risk down to about, I would say around 6,100, 6,000. So you have a, potential 15-20% to the downside here. I think at some point this year, maybe it's right now, maybe it's mid-year. So 2026 is not going to be as easy a ride as 2025. And those who are, speculating in the precious metals and crypto, for example, have learned a hard lesson about things going up too fast, too sharply, too fast. So it's this is the fun game of the markets. I mean, we had mentioned getting short the market and had mentioned those positions for VR Trader clients, and had been out of gold and silver for a while. Many of my subscribers to my metals resource letter were a little frustrated. In the last few weeks we weren't in precious metals, and I just said too high, too fast. I'm not interested. I mean, the GDX, all the indexes were just almost parabolic in their advance, and I'm not going to catch the exact top or the bottom. But when you get these type of advances, I just got out. So just stand aside, and let the force of gravity come back into play, which now is happening. And the markets aren't dead. Gold and silver aren't dead. Crypto is not dead. They're just going to go through and have gone through a corrective phase, and we'll have to wait for both sentiment, news, and technical confirmation of it all being over. So, in summary, we're seeing what was expected, and we're just going to have to wait for other triggers to tell us it's over.
Bitcoin, of course, has always been the most volatile thing out there because there's nothing actually backing it. Any fears that it could just disappear forever?
There was a rumor about that, and we talked about this weeks and weeks back. I'd read some article about, with the new fast computer technology that's being developed, the AI, for example, or super fast computing. There was that possibility, and it was such a speculation that somehow the code to Bitcoin could be broken. Nobody can really get into the Bitcoin coding, for example, and it's been like a big secret since this thing unfolded after 2010. So the theory is that if fast, high-tech computers, whether it's AI or otherwise, could break the code of Bitcoin, it could bust it wide open, and it could go to zero. And that was just speculation on an article that I read. And with all the high-powered computing going on, and all the greed out there trying to get Bitcoin and mine for it, all the energy that was being used with all these mining operations trying to pull Bitcoin off the blockchain networks, and everybody's accumulating them all these many years, or trying to, and some pretty successfully. But same token, if somebody breaks that code, it could be the end of Bitcoin. So again, this is, I could see where it could happen. I mean, honestly, if something is written by a human being and it's a code, why can't it be broken? And so that was the gist of the article. So that's the best explanation I could give you. In theory, when Warren Buffett and some of the real smart people of the world, I think he was credited with the statement, it could go, the way of the dodo, and it could go away, may not be so far afield from the truth, so, but I think the whole crypto world is, something, unless dramatic changes in U.S. government policy and the world's attitude toward, cryptocurrencies, some dramatic change occurs, we seem to be moving in that direction. It's the big powers that be, want to digitize everything. We've already legalized the stable coin, for example, which doesn't change value. And, some big U.S. companies are starting to issue those. And that was a result of the legislation in Congress. And there's still more pending, by the way. So the theory is, as I mentioned before, it's a 3, 4, 5 year process. I think last year I mentioned much of this could be uncertain well into 2026. because of the pending legislation and so forth. So when we had the run last year, I did mention a few times that, a lot could depend on what's happening. And sure enough, a lot of legislation has been delayed and the sell-off. And, the contrary point of view, though, and we're going to take the conspiratorial, manipulating point of view now for a second, is that maybe the cryptos are intentionally being driven down so the quote-unquote smart money can accumulate them. And this historical precedent. I don't think you have to look too far in U.S. history. Big names like Bernard Baruch and Jesse Livermore and others had talked about this decades or even 100 years ago about manipulation in the markets. So many times that's indeed what happens. If big institutions and powers that be want to accumulate something, they manufacture a decline and are able to take advantage of lower prices. So maybe the big washout in Bitcoin and other cryptos is a setup for a huge explosive slingshot event back to the upside. And whether that happens this year or within the next couple of years, time will tell. And that's something you have to keep in the back of your mind too. So I'm more of the view that it's a super correction. Not so sure that Bitcoin will go to zero about that theory about programming and so forth. But I think it's just a part of the volatility of the market, and also perhaps even a part of a little conspiratorial manipulation on the part of the big money players to pick stuff up cheap. When you're trading on the floor of the exchange, as I did many years ago, and if you read many articles about the way the big exchanges work and the way traders work, that stops can be triggered and prices can be forced in both directions, by savvy investors or institutions that are able to move markets. So it's not unprecedented that you'd get a huge move, to the upside following a big move to the downside. And frankly, over the years, I love looking at stocks or any market that have big washouts, because that's where you have the opportunity. So, why chase stuff into the sky and when you can, wait and be patient. And if you get a big washout, it could be any name stock or any, currency or any commodity or, any crypto or whatever. And you look at your charts, and if it's get enough of a correction and the charts say it may hit support levels or showing signs of bottoming after a big washout, that presents an opportunity. And it's happened so many times in my career that you see this happen, but you have to have patience. It's not necessarily a day trading situation. It could be in some instances, but it's something that we've seen happen over and over again. So I think that's, really what's happening here. And a long-winded response on the Bitcoin, but I think I was looking for something like this year based on what I saw last year. So we'll have to see how far it goes. There are some cycles that indicated that we would peak out. Some work of a good friend of mine that I don't know if he wants me to mention his name or not on the air, that does some cycle work. It indicated that we might see some big peak in Bitcoin late last year, and then maybe a decline even up to 12 months before it took off again to the upside. And that sort of tied in with the pending government legislation and the fact that there are so many overzealous bulls, in the Bitcoin world. I mean, if you recall, we've been hearing numbers, 200,000, 250,000, even $1 million for Bitcoin in some commentary. In fact, over a year ago, it was like a year ago, January of 2025, some noted analysts were predicting 250,000 in Bitcoin. So though it got to 126, their obviously forecast was way too optimistic. So we'll just have to wait and watch now and see what happens.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back.
Whoops. Go ahead. I'm sorry. I'm just trying to figure out what we're going to talk about next. Go ahead. I'm listening.
Welcome back. We're speaking with Mark Leibovit. Mark, with a new head for the chairmanship of the Fed, likely to be Kevin Warsh. Do you expect there will be a different policy on interest rates once he settles in?
Well, there's a whole interesting discussion regarding Kevin Walsh because he's been in fact, I was going to put an article in my newsletter today just about that subject. He's been a critic of the Fed, and for good reason. I mean, the inconsistency he refers to, that it's like groupthink. Everybody thinks the same thing. There's not that much room for dissenting viewpoints. Much analysis is ignored. And it's, I don't want to use corrupt or anything like that, but there's been really problems at the Fed. We know that anyway, and I've been a bear regarding the Federal Reserve for many years, and I have to admit I was influenced many years ago by the famous book, The Creature from Jekyll Island, that we put a picture of in our newsletter every week, that talks about the formation of the Fed back in 1913 and all the shenanigans surrounding it and so forth. But Warsh was actually talking about, in an article in the presentation he made last year, about the inconsistency and a lot of the shenanigans in the Fed itself that needs to be reevaluated. So it's more than just whether interest rates are going to come down. I mean, I don't know how aggressive he's going to be, but there's a real house cleaning that really needs to take place at the Federal Reserve. An audit may be needed, whether he's a proponent of that or not. Some congressmen are. Some of the outlandish investments that the Fed has privately made, to public companies, for example, and I've cited some of those. And you can, do some research. You'll see the stories that are on the on Google and Internet and ChatGPT that talk about this. But preoccupation of whether the Fed funds rate is going to be up or down a quarter point every couple months. I mean, it's so limited to what really goes on at the Federal Reserve. And, there has been comments on the part of some congressional members about we need to revisit the Federal Reserve, perhaps restructure it, even eliminate it at some point, because it's been, acting incorrectly. It's been mismanaged. And I think even you, Jim, you had mentioned to me in previous interviews about how many recessions have been caused by the Federal Reserve itself. History speaks the truth about what has been caused. In fact, during the Great Depression, the Fed actually raised interest rates, which was the worst time to have done that. And Ben Bernanke actually was cited talking about that back in 2000. I think it was 2011. It might have been 2008 or 9, but he was quoted saying, "Yes, we did it. It's our fault." Regarding the Fed and how it acted during the Great Depression, and the fact that it made things worse than might have been because of their inept approach to interest rates. And again, they're only involved with the short-term rates and not the long-term rates in the bonds. So I'm a freedom of market person. I don't think the Fed should exist. This is opposite anything you'll see on the national press, because everybody wants to walk the line and they don't want to make any waves. But the Fed's already proven that it's done a very bad job of what it's doing. I know Andrew, Andrew Jackson, the famous U.S. president in the mid 19th century, abolished the national bank in the United States and actually paid off all the debt for a short period of time, and the country was in good shape. That changed pretty quickly as we approached the Civil War and so forth here, but there was actually a period when there was no national bank. And I'm a free market person. I think the market should determine interest rates. The Fed should have nothing to do with it. Doesn't mean you don't have a U.S. Treasury or anything like that, but for some reason everybody's been brainwashed since 1913 that you have to have a central bank controlling everything. And the actions of the Fed, frankly, the central bank have been very, very disappointing and actually disastrous in some situations. Alan Greenspan, I used to joke about it, among others, back in the 1980s, 1990s. Some compared him to a New York taxi cab driver because he would slam on the accelerator. That means, lower rates, and then slam on the brake and bring rates up again, and slamming on the accelerator, slamming over several times very aggressively. showing an inconsistency of thought and action. So nothing personal against Alan Greenspan, but, that type of thing was a good example about how the Fed is so inconsistent and really doesn't know what's happening. We assume the Fed's out there, and I'm getting off your Walsh question, but, essentially, that they're all knowing. The economists there are smart. They can predict the economy and the markets, which is totally opposite of the truth. So, where's the truth? Well, the truth is in the free market itself, and that's really what we need.
Do you see a day when the Federal Reserve might be abolished because it hasn't worked? Bob Hoy, by the way, historic market historian, has pointed out there have been 18 recessions or depressions since the Fed was created, and the idea of the Fed was to stop that from happening.
Right, it's supposed to be full growth, for stable economy and full employment is sort of their mandate, and he's absolutely correct. And a couple of U.S. senators have actually entered bills about abolishing the Fed and auditing it. It doesn't go anywhere. So, but the bottom line is, time will tell. I mean, things change. Who knows what will happen in 10, 20, or 50 years? We know what state of the country is in and who's in charge politically and so forth. But we've had acts, revoked and things changed. And, I'm a proponent of it being abolished. So that's sort of my opinion. It just, whether we replace it with something better or something that makes more sense, time will tell. But, we have all these Fed governors and so-called experts who really aren't experts on nothing. I mean, I met a couple of them, and I start talking about the same subject we're talking about. They didn't want to look at me. I mean, it's like they think they've got the answer to forecasting the markets and the economy. And the truth is, the markets itself are its own forecaster, not what we say about it or think we can do about it. So, the Fed could lower rates, raise rates, do all this manipulation, yet we still get market crashes, we still get recessions. And you can see from what Bob Hoy just told you, their actions were disastrous in many instances. So the evidence is there, Jim. The evidence is there. I mean, if they were compensated or rewarded based on performance, they should have been fired a long time ago, which means not only the members but the institution itself. So anyway, every time the subject comes up, that's where I go. That's probably why I guess I'm not talking on CNBC tonight or on Fox News, because they asked the same question and said, I would say, what are you talking about? Let's abolish the damn institution and move on.
Mark, thank you so much for chatting with us.
Thanks so much for having me. A lot of fun. Thank you.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark or for any of our guests, you can send them to info@howstreet.com. Find us on X @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.